70, this year. I mean, certainly 50 or 60 this year. So that's the kind of the most notable and exciting thing that's happening. Obviously, I'm bulled up on gold and Bitcoin too. I mean, they're both going to move. There's been a pattern. I had a chart that I've shown some people on it in other pods about how gold and silver kind of tend to smell monetary debasement a little earlier sometimes than Bitcoin does, and they move first. And then, of course, Bitcoin suddenly starts to move, and it moves farther or faster. And so, it's a little more volatile, a little more subject to, kind of other things going on, risk assets and stuff. So,
Lepard begins by emphasizing one of Bitcoin's greatest advantages over traditional gold mining companies: the absence of a management team capable of making poor decisions. Unlike conventional mining firms that can suffer from mismanagement or inefficiency, Bitcoin operates through a decentralized consensus mechanism. While developers may contribute to the network's evolution, no single entity possesses the power to permanently disrupt it. This inherent resilience, he explains, is a key reason Bitcoin has the potential to outperform both physical gold and gold mining stocks at certain times. Historically, Bitcoin has adhered to a 4-year halving cycle. Before continuing, please take a moment to like this video, subscribe to the channel, and turn on post notifications to stay updated with future content. You can also explore our other videos on cryptocurrencies and the broader digital asset landscape, and share your thoughts and feedback in the comments section below.
So, I mean, in the long run, I'm incredibly bulled up on all of them. Probably more, I think and I wrote the book, I'm probably most bulled up on Bitcoin, to be honest with you. I mean, it's very volatile with big drawdowns, but I also think there's a lot of upside. So, but if you're looking at kind of the balance of this year, I mean, I think we closed the year in silver at, I don't know, 60 or 70, which is, a lot from here. It's like 70 or 8%. I mean, gold, 4,000, it's up another 20, 30% from here. And maybe Bitcoin 140, which is up another 20% from here. So, so you can see of the three of those, I think silver's got the most excitement. And then I know we're going to get into this. Let's talk about the mining shares, right? So that's just the metal, So if you're a silver miner and, you've been making money at $36 or $38 silver and you've got X amount of profit, well, guess what happens when, and your costs go up with inflation every year. That's happening. We all know that. That's what happens when you take silver to 50. Your profit just went up, multiples of where it was before. And so that's coming. And these silver miners were cheap until recently. I mean, they have run a bit, but, a lot of people have asked me, oh, am I too late? Where are we in this whole thing? And I'm like, no, we're in the second or third inning of this share bull market, in my opinion. So there's I think there's a lot of upside, and I'm very bulled up on what's going on in the gold and silver shares, right? Up in the wind, as you know, and I don't know. I mean, I could be dead ass wrong. I mean, I don't think it's going to be lower than 45, and it could be 70. I mean, I guess it's probably based on technical analysis, and it's been suppressed for a very, very long time. And all the factors that all those of us in this trade have known for many, many years, I think are becoming more now, you're seeing this shift so that everyone else is beginning to understand those factors. And what are a few of them? Well, one, the solar growth in China is just enormous. Chinese solar panels are now taking 30% of world production, and that's going to grow to 50 or 60% of world production. You've also got these new solid state batteries that are being developed for EVs, not fully commercial yet, but going to be, we think, in the next few years. And they absorb an enormous amount of silver. And then, as you know, Andy Scheckman and all the others have shown us, we've been running these huge supply deficits. We've been, we got grandma melting down her tea set to sell it to the local coin dealer. And, it's just, there's been a chronic shortage of the stuff. And it's a small piece of the price of many of the things that it goes into. So if there's silver in your iPhone, not a lot, but there is some. And if that silver price goes up, they could pass it along easily because it's a $1,200 phone. So the point is that there's just a lot of things that are finally kind of coming together. And I think, guessing this, the 60 is a guess. Let me just say that. I don't know, right? But it's kind of finger in the wind technical analysis. Typically, when you do break through a support level, you tend to zoom pretty hard. And I think if you look carefully at a chart, you can see some flags and stuff. I mean, it's kind of like gold, gold kind of, squirted up nicely from the 26, 7, 8 area to 3,500 and built a really long bull flag at 3,500. It was kind of stuck there for the last few months, many months. And, now it's broken out of that. And so, typical technical analysis says flags fly at half mast. Well, all right. So if it was at 27 and it went to 35, I mean, that's $800. So add $800 onto 35 and you're at 4,003. I mean, I don't know if we'll get there, but I'm pretty comfortable we'll get to 4,000. And interestingly, I mean, the other thing I've really noticed a big change. And I mean, what's driving all this trade? I mean, as we know, what's driving all this is a broad knowledge of the sovereign debt crisis that we're in and how they're trapped and they can't get out. That's what's driving it. And so what are the evidence that everyone's getting it? Goldman Sachs, biggest bank in New York, says, Investment says, we see gold at 4,000, maybe at 5,000 if the Fed loses credibility. Well, okay, that's pretty damn mainstream. And I got to tell you, a year or two ago, gold was at 2,600 and everyone's looking at the stocks and saying, yeah, but it's going back to 2,000. So the stocks are, fairly valued. And I was like, no, it's not. It's going to 3,000 or 4,000. And of course, turns out I was right. They were wrong. And there's a catch up. And
Lepard makes his position unmistakably clear. The real issue lies in the sovereign debt crisis. He argues that the U.S. government's current fiscal trajectory is completely unsustainable. Budget deficits continue to swell, expenditures keep climbing, and political leaders display little willingness to impose meaningful spending restraint. Even when policymakers pledge to implement cuts, the measures are trivial in comparison to the magnitude of the problem. As long as the government continues to spend significantly more than it collects, Lepard asserts, the Federal Reserve will have no choice but to monetize the debt. This process inevitably leads to greater money creation, mounting inflationary pressures, and powerful tailwinds for tangible assets such as Bitcoin, gold, and silver. Historically, Bitcoin has adhered to a 4-year halving cycle. Before continuing, please take a moment to like this video, subscribe to the channel, and turn on post notifications to stay updated with future content. You can also explore our other videos on cryptocurrencies and the broader digital asset landscape, and share your thoughts and feedback in the comments section below.
I think it's an excellent point, Trey. I would also point out that what makes this thing move so hard and so fast is just how small it is, okay? We mine 800 million ounces of silver a year. And, at $40 an ounce, I mean, it's just not a lot of money. I mean, in a $900 trillion asset market, 800 million times 40. I mean, what is that? 3.2 trillion. I mean, it's just a small. I'm not even sure I have that right. Let me do my math here. 800 million enter 40 times. Yeah, it's 3.2 billion. I'm sorry. I mean, that's a rounding error.
It's a small hedge fund.
Yeah, in most of the world. So if big money decides they want to come after it, it's going to move it. There's just not enough of it out there to supply big money with it. So higher, but the path is unclear. I mean, the technical analysis says we formed a bull flag at 3,500. As I mentioned earlier, flags fly at half mast. We should go up into the 4s. As you get further out, a lot of people have asked me, what's your ultimate goal, ultimate target? Where do these things go? And, in my book, actually, there's a chart that was done that shows that, to fully cover, the monetary base with gold, we'd have to have $90,000 an ounce gold. Now, but you don't need full coverage to run a gold standard. You can run it on 20%. So, that would imply, I don't know, $20,000 an ounce gold to back the dollar with gold. I think what's very important for people to understand is it's all going to depend on the policy choices on a go-forward basis. I mean, what do we do? I mean, what makes this trade not work? And of course, I tell people this, they're thinking of getting my fund, is if the government suddenly gets responsible and balances the budget. And of course, they laugh hysterically because we know that so far there doesn't seem to be a lot of indication we're going in that direction. I mean, Doge came along, we're going to save 2 trillion, 1 trillion, 300 billion. Oops, maybe we'll save 100 if we're lucky. And then suddenly, the Freedom Caucus is out there saying, we're going to balance the budget. We're going to make these people cut expenses. Well, everyone except for Rand Paul and Thomas Massey caved. And, the big, beautiful bill is going to increase expenses by $300 or $400 billion a year. Now, that's offset by higher tariffs, which is a good thing. But But the point is that the fiscal trajectory of the federal government's a mess, as you know. And as long as that continues, and as long as the Fed is forced into the policy role of monetizing that, which they are in right now, and we just saw some more evidence of that last night. I mean, the Cent has got a really neat trick going on. What he's doing is he's selling short-term bills, 30, 60, 90-day paper, and he's using some of those proceeds to buy the 10-year. So really that's kind of, I call it shadow yield curve control, right? Because he doesn't want the 10-year rate to go up, because that, that will hurt his case for the economy and so forth. So, so we just don't know where we're going to go. We don't know what Trump's going to do. Although we do know from his behavior with respect to the Federal Reserve, and I like to call the Federal Reserve, the real housewives of the Fed these days, given all this, what's going on with the attack on this governor. And of course, what she did was wrong. But, okay, whether anything changed between now and May's not that far away. We're in September, so count it. It's and we know with high degree of certainty that in May, Trump is going to have a majority of the Fed board and a very dovish Fed governor. I mean, Trump's called for cutting rates 300 basis points. And I think that's what gold is smelling, to be honest with you. I think the reason people might say, well, why now? Why gold? And I think everybody kind of looked at it and go, oh my God, I can see what's coming here. He hates the Fed. He wants to drop